here. Today is Wednesday, April 10th, 2024. Well, it's been another up week, this time for all four of the metals. All the details in the write-up, but gold is leading the way on the 1-year time frame, up 17%. And as we speak, gold's higher than last week, and it appears that it's continuing to rise. And so it'll probably be even higher by the time you see this video. But let's talk about today's question: what are gold ETFs? And to answer that, we first will define what is an ETF. An ETF is investment lingo. It's an acronym that's short for Exchange Traded Fund. And it's exactly what it says. It's a fund, an investment fund, that's traded on a major stock exchange, such as the New York Stock Exchange or the Toronto Stock Exchange or various exchanges across Europe and Asia as well. And so it's a paper investment. Sometimes it's claimed the reason people invest in them is they think they're getting exposure to precious metals when they buy a precious metals ETF, such as a gold ETF. The truth is that very few ETFs that have gold in their name or that claim to be connected to precious metals have any kind of direct connection to the physical metal at all. Most of them do not provide the average investor any way or any real physical exposure to the metals. So what they do, however, is most of the time they're going to involve paper derivative investments that are loosely connected to the price action of gold. But the problem is, at the time you most need the exposure to gold, these derivatives and these ETFs can sometimes implode and just not provide the defense, not provide the connection to the price action at all. We saw this happen with oil ETFs back a couple years ago when we saw oil take it hit a negative price per barrel due to inefficiencies in the markets and just the way things were panning out. And what happened, it blew up some of those ETFs and they didn't pan out at all for the people that owned them. And we can see the same thing happen with gold. Now, interestingly, sometimes the investment houses that are promoting an investment, unfortunately, they're doing the opposite in the back room. So, example, if they recommend to their clients to sell, for example, sell their gold ETFs, often in the back room somewhere, they're buying it because they think gold's going to go up. And then after gold rises for a while, they'll go back and say, oh yeah, Mr. Client, Mrs. Client, you should buy gold because look how it's doing. And then as their clients pile in and gold goes even further, then they start to sell. So those kind of games, unfortunately, go on Wall Street. We don't do that here. We try to tell you what we feel is going to go up before it goes up. That's just a better way of doing things. And we've been recommending and trying to provide reasons why it's been a good investment long-term to invest in gold. And if you look at the chart, I'm going to include it here, it shows the flows into gold ETFs have been going down at the same time the price of gold has been rising. And so what that means is people are likely going to realize their mistake soon, people that invest in these paper derivatives, ETFs on Wall Street, and they're going to pile back into the gold ETFs, which is likely to help gold's price continue to be propelled higher, another potentially 15 to 25% just from all the investors reacting to the rising gold price. So this is a great thing for you and I as physical metal investors as we get to ride the continuing wave of higher precious metals prices. Now keep in mind, it's not every day it's going to go up. There's going to be times when it takes a breather, but it appears that we're in an overall bullish trend, in an overall bullish market, and I don't see any end for that in the near or intermediate future here. So thank you for tuning in. We look forward to speaking again with you soon. Have a great weekend.